Welcome to TMS Insights. It's early in February 2026, and it's a bit of a special edition today, Ben, as we've seen markets really in quite a lot of change and quite a bit of selling in some areas. Some areas of the market's going quite well, but it's really, when markets are moving in heavy moves in sectors, we need often to get our word out to clients to explain what's going on. And we think it's one of those days, really, don't we?
Yeah, well, I think we were just talking offline before, and the last time you're away for a week, and the last time we called you in from your holiday was it July 2022 when
Yeah, during a pronounced sell-off of across markets, really. It was interest rate driven, but it was one of
yeah,
those times, wasn't it? So we're seeing some shadows
some
or influence.
similarities.
Yeah, that's right. Yeah. So I'm here. I'm here, mate. I'm here. So but this one, they're always different, aren't they? And this one, we've seen that what you'd regard as a single line as a high growth sell-off, I suppose,
Yeah,
and an AI worry moment,
yeah,
and with a few different angles to it. So we want to unpack that for everybody today,
yeah.
and give a bit of an idea. But just to say, we don't think this is a highly common event, and that's important for people to understand.
Yeah, definitely. I mean, we've been, I think, highlighting on these insights videos for over a year now that AI is going to bring disruption to different businesses and different industries, and there's probably going to be periods where the market goes through concerns about that, and you see some weird sort of price action. We're definitely seeing that at the moment, particularly in the software businesses. So, um, fairly small part of the Australian market, massive part of the American market. The US SaaS businesses or software as a service business sector has fallen top to bottom about 30%. And that selling has really accelerated just in the last week. And the
Mm.
catalyst for that has been Anthropic, which is one of the big AI players, similar to Gemini and OpenAI.
An
Has
LLM, an equivalent LLM, in a world where
exactly.
there's multiple
Yeah.
players. Yep.
They've released a series of product releases, one particularly in the legal space, and the markets have looked at that and freaked out about the change that's coming and the potential for disruption to these incredible businesses, which have been the best part of global markets over the last decade, you'd say. Um, so we'll have a chat about this, Jez, but I think a starting point for me is a year ago, these businesses were seen as the AI winners.
Mm.
The valuations got completely excessive on the upside, which we sort of called out at the time. Um, and you couldn't find anyone that would criticize or didn't want to own these businesses because they were seen as part of this new world order. And it's just incredible how quickly that's flipped to these businesses. The market's now freaking out about the future of these businesses and whether they can survive in an AI world.
Yep.
And the selling that we've seen has been completely indiscriminate, which always has me and I'm sure yourself licking our lips and thinking that there's got to be
Yeah.
some opportunities here. And that's been a real feature, particularly we're going through the US quarterly earnings season. The Google results about to drop. Results have been
Literally
incredibly
very
strong.
soon, right? Yeah, it'll be
Yeah,
out
it
before this video
comes out
is
in about an
released.
hour. We're recording this
Yeah,
very early because of the time difference. But the results have been amazing. Microsoft's result, if you looked at that as an example.
absolutely. And we'll give some parallels to what we think this, but Google 12 or 15 months ago was one of the most loathed Mag 7 stocks and was the best
Mm,
performer last year,
yep.
of the group, which was concerns about its inability to keep Google search up in the face of LLMs, and
Yep.
that was wrong. And they've got multiple avenues of growth. So what we're trying to illustrate for people is just how hard it is for markets to read it accurately while massive change is going on. And we know there's going to be winners, we know there's going to be losers. I think all of the economy broadly is a winner because of
Mm,
potential efficiency gains. And the winners are going to be a lot of companies as well. So
Yeah.
but when you see this kind of selling, you see just that there is some incumbency risk that is being played out and just fear, but it's not
Yeah.
based on any better knowledge than we have potentially, or somebody sitting at home might have about how this will all play out in the next few years. And I think that's the point, Ben. Markets try to get to that point very quickly sometimes
Yeah.
for things that are going to play out over a long period of time.
Yeah. Absolutely right. Because why this is a haven for short selling potentially, or so hedge funds wanting to take advantage of these sort of events, is that no one will be able to categorically say which businesses were ripe for disruption as a result of these
Yeah.
changes. But what I can tell you is it won't be every software business. That there will be some software businesses that get disrupted by AI. There will
Yeah.
be some software businesses, and I suspect it's the majority of software businesses that will be largely unaffected by AI. And then there will be some software businesses where the earnings actually accelerate as a result of AI. I went to Xero's Investor Day on Tuesday, which was a half day, which pretty much only spoke about AI and what they were doing with AI. And the CEO spoke at length about why Xero won't be disrupted. We saw every analyst, and there was also, mind you, a profit upgrade in that
Yeah.
day as well. Every analyst came out of there upgrading their share price target on Xero, and we saw it fall 15% yesterday, purely because Intuit, which is the US competitor to Xero,
Yeah.
fell a similar amount the night before. So
Yeah.
you can see that the the actual narrative is not matching up to what the share prices are doing. But during periods like this, the baby can get thrown out with the bathwater.
Yeah.
And that from what I can work out is the enterprise software businesses are probably the most at threat, although I'm sure most will be okay. But businesses like Xero, and some others in Australia, you're not going to get 4 million small mid-sized companies decide to move to a startup provider when they're only paying $35 per month to Xero on average anyway, and risk their entire backbone of their business falling over as a result of this.
That's it. So you're more concerned with the big corporate players where
Mm.
but a large contract could disappear. But
Yeah.
unlikely to potentially disappear, I think, Ben's the way of saying this, because the market's looking at only the downside. So yes, there'll be some better value propositions for, say major banks to do their,
Yep.
outsourcing with, right?
Yep.
But
Yep.
equally, those companies will have benefited from probably cost savings to deliver. So if the margins maintain, we don't have a concern. That's the thing.
Yep.
So I just get that sense of the short-termism of the market sometimes, focusing on either too much of the positive or too much of the negative. And so
Yeah.
that balance needs to be, by investors picked up. And that's the opportunity point that we're really trying to say. And today, let's get into a couple of names, maybe in the local market, then the US market.
Yep.
Noting a couple of big picture changes before I throw to you, mate, is obviously we had an interest rate rise in Australia this week.
Yep.
We've had a new Fed appointee, lined up in Kevin Walsh, out on Friday night in the US, who was seen probably slightly more hawkish than
Yep.
another appointee might have been. So that was a little negative on the monetary setting. So that's probably been surprise that's been dealt with now as well by the markets. But overall, it had a little bit of an interest rate setting change, which is a little bit of a backdrop to understand something that's going on as well. And again, probably overplayed out because we're not talking about massive increments here. But in terms of the macro settings, since we last chatted on an Insights, there has been that change. But as we said, the price changes on the stocks we're now looking at are a lot larger. And the final point for me is just that currency thing. When we talk about the value of US stocks, we are now talking about a 70-cent handle to buy US dollars with, which is, again, that's a much better positioning point for an Australian investor than it was previously.
Completely right, Jez. And look, the interest rate story, when you think about in Australia, back in September, the market had priced in a rate cut in February and another 1.5 rate cuts this year. So that interest rate shift would have seen selling in growth stocks regardless. We know that they're very sensitive to changes, and that's been quite a pronounced change in short-term interest rates.
Yeah.
But coming back to this software story, I'm just going to highlight another time that we saw behaviour, I feel like this, which was when the GLP-1s, the Ozempics, the Wegovy's suddenly became mainstream offerings, and what we saw was this bizarre pricing behavior in share markets globally. So the markets suddenly decided everyone's going to lose all this weight, and everyone's going to be on a GLP-1. And we took an interest in this because ResMed fell 50% during this period, which is one of our bigger holdings. Fisher & Paykel Healthcare fell, and there was some other stocks.
And just adding that, yeah, airline stocks rallied because less weight would be less fuel, equal more profit. Restaurants, fast foods, restaurants.
So McDonald's, etc., got slammed.
Yep.
The confectionery stocks got slammed. It was just extraordinary, and so we were looking at this going, this just doesn't make sense. And I think it's a good learning lesson, because if you fast forward to today, what do we look back on and see? Point number one is the markets were right about tens to hundreds of millions of people taking GLP-1s. That has transpired. Yes. It's estimated in America more than 100 million Americans are now taking a GLP-1. But what we have, McDonald's is an all-time high. The airline stocks got no benefit. So the market was right about the change that was coming, but it was completely wrong about the change in behaviours that were going to happen as a result of the weight change that happened. And I think that's the important point, is people don't change their behaviours, or companies don't change their behaviours overnight as a result of a change. People behaviours are extremely sticky, and they change very slowly over decades, not instantly. And I think you can apply this to these software stocks, these learnings, because when you are seeing completely indiscriminate selling, i.e., every software business in the world is about to lose all of its customers, you look at that and think, okay, maybe with a handful, but almost certainly not with the majority. And the valuations now are the best we have seen them since that July 2022 period when we last saw a big tech sell-off. So there's kind of a call to action here, which is Xero, which we saw, Life360, which is a new one I've started buying, which had a profit upgrade only a week ago. Pro Medicus is another stock that we might not have spoken about. It's more in the health technology space, but it's been pulled down with this. The marketplace businesses like Seek, car sales, and REA. That this change is not going to happen anytime soon. And these companies, as a result, have now moved from extremely high earnings multiples a year ago to now, if you look at the historical multiples they've traded on, these are some of the best multiples we've ever seen them trade on. And so this is when you can make outsized returns, is when you are going against the tide.
Yeah, exactly. And then to give a flavour of the whole market, we've also seen a big rally in commodities. So actually, a big performance out of leader stocks and emerging players in the resources space. Obviously, there's been a big move on precious metals up and then a bit down, but the bulk commodity stocks are big, and the base metals, copper, etc., aluminium, very, very strong. So BHP, Rio, Mineral Resources, Fortescue, and a whole range of other mid and small cap producers are, right at the top of their 52-week range.
Absolutely. So, and I think that also highlights why diversity in a portfolio is so important. Technology businesses have been the place to be for the last decade, but they've routinely had 40 to 50% drawdowns during that journey. And you've got somewhat of a shock absorber if you've got businesses where that money will rotate to during those drawdowns. Last year was the banks. It was, largely illogical, but it happened. This year, and into the end of last year, it's been the resource stocks. And there is more logic around that because we are going to see earnings upgrades coming out of these companies because the metals prices that they're selling have risen so significantly. I mean, it's great to see BHP at an all-time high. The copper earnings of BHP are now going to be around 50% of group earnings, and they've got this beautiful tailwind from the data center build out that's happening around the world because of the electricity generation and build out that's occurring. So yeah, totally. It's in a crazy market yesterday where some stocks were down 10 to 15%, the market actually rallied 70 points.
Yeah,
and that's because the resource stocks are such a big part of our market these days.
Yeah, no, absolutely. Well, just rounding it out, I suppose we've got reporting season in Australia, which is just underway now and gets into full swing in the couple of weeks that follow. We're expecting good things overall from the Australian earnings season. And again, it's always in the detail that we have to listen and understand. We'll be bringing updates over 2 different insights in the course of the rest of February. Any comments on reporting season? Then maybe last remarks as we jump off this insights today.
I think leading into it, we've had several companies update the market with strong results. So Xero would be, one I call out there. We fortunately, knock on wood, we haven't had any companies that have come out and downgraded leading into this reporting season. And then if we go back to the US reporting season, which is, sort of 2/3 of the way through now, there's been, again, a significant beat of expectations by companies reporting. It hasn't necessarily translated to their share prices this time around. So again, as you're saying, 70-cent handle, weaker share prices, but stronger earnings. These stocks to an Australian investor have got even cheaper. And, it might being taking advantage of that is a good idea as well.
Yeah. And so overall for people, make sure we understand that these are contextual moments in markets where you get periodic sector sell-offs and they're totally normal. As you said, drawdowns 40 to 50% in high growth stocks actually happen regularly. The opportunity, it's why you want to be there. And you don't want to buy a really good stock when it's too expensive, but when it's sold off by those sort of margins, they actually become great opportunities. And clearly it's so motherhood statement light, but then your returns are so much better. So you don't want to run away from the fire. You've got to run into it. That's the way to get returns.
Absolutely. And again, going back, when everyone is pumping up the fire, that's when you want to be pulling back a bit. And trading the margins around these high growth stocks is the way to play it. If you're selling a year ago, you're feeling great about buying now. But at a minimum, what you don't want to be doing is losing sleep about completely irrational pricing behavior in markets. It does happen, unfortunately. We'd love if it was always rational, but it's not. But that does give you opportunity.
Yeah, exactly. Well, we'll wind up today and look forward to bringing some earnings news to everybody really soon.